Yo, what is going on, guys? Today, it's not gonna be talking about, kind of like charts and technical analysis, but more of what the difference is between, investing and trading is, and also, what you should do, and also what exactly you're gonna be looking for in both things. So, let's get started. So basically, trading is basically just, you know, trading. You could trade shares, you could trade options, you could trade um you know bonds, you could trade many stuff, and there's so many things out there that you could trade Bitcoin. But basically, exactly what trading is basically just selling at higher and lower prices, for gains. And you could also short, which is basically betting on it going down with shares, or you could short through put options. And also you could trade, forex, which is currencies. And there's so many stuff out there, like I said. So let's get right into it and what the difference is between trading and um you know investing is. And basically what trading is, like I said, is basically just more high pace. You're basically just trading securities for fast profit. And it might not be fast profit, but you can hold stuff for 2 weeks, and that could be called for short-term capital gains. Or if you want to invest, those could be long-term capital gains, and you won't get heavily you won't get tax deducted too much for it, because they're long-term gains compared to capital gains. I mean, short-term capital gains. But and why should people choose one of them, and what should you choose? I mean, so it just depends on what you want to do. If you want to go for something safer, then I do recommend investing normally in shares. Or if you want to buy, if you are interested in investing in Bitcoin, then go and do that. And honestly, it just depends on what you believe in, and what your risk tolerance is. And you could obviously, I'm not gonna get into it into this video, but if what you should invest in, because um it's your money. I'm not gonna tell you what to do with it. um but you know investing is more cautious, it's more safe. While trading is more of a high pace um thing to do. And you could lose money way faster than you could investing in the long term, because most of the time, all if you're investing in really safe stocks, let's say, just say Caterpillar. Those are pretty safe securities that you could buy, and they will go up in the long term no matter what. you know and also you could buy different type of stocks, because there's all type of different sectors. So you could buy growth stocks like Zoom, which has had an amazing run. The past, you know as the past year, when COVID came. And it went literally, from lows of $60 to almost $588 a share. And this kind of has fallen because people expect COVID to kind of die down. But that's not the point. But these are all growth stocks based on what the circumstances are in the stock market. You could trade, for the reopening of the economy. um, you could trade oil, and oil has kind of had like a bit, obviously it's kind of falling because of inflation fears. But oil has kind of had like a pretty big run in the past time. So you could, let's say, you think that the economy is going to start opening, you buy it around here. Let's say you sell around this top right here, you would have a gain of 60 to 60%. And about, let's say, 6 months. So this is about a 6 month range. So yeah, it's not pretty bad. And you're not risking much. You're not risking much because you're not trading it. You're just investing in it for the long term. And you're going based on what your thesis is. And everyone has different thesis. Some people may be like, oh, I don't like oil. you know or some people may be, oh yeah, I like oil right now because whatever their reason is. And they may invest in it, and they can also trade it, since also there's there's more risk in trading it than investing in it. So let's get right into some things that some people have asked me before. And that is, what stock should I invest in? And that just depends on your risk tolerance, to be honest with you. if you want more of like a fast pace, portfolio that kind of outperforms some things than others, then you would go for kind of your high growth tech stocks. And also it depends on like how exactly what you want to do. So let's say you have a startup company that comes out, and that they're like, that they're coming up big, like Square, which was pretty small back then. And let's say you think it's gonna do good here, and it's only at $50 a share, and you're like, oh yeah, I like this company, blah blah, and I think it's gonna do good in the long term. And now Square has reached highs of $283 a share, and that's in the short term basically. You know because if you're looking more into the chart, then this is about a year and a half's run. That's huge. Let's say about it right here, this is about a almost, let's say, 323% gain in about a year. And that obviously you're not going to go all in, and I don't recommend that. You're not obviously going to go all in and say, oh, okay, I believe in this company and I want, and every company that's a startup is going to do 340%. It doesn't work like that. It just depends on how good the company does. And obviously as the company comes out with good stuff, in the in the long term, and you're like more believing in it, then you would obviously invest a little bit more. And obviously don't don't keep investing too much once your average price is already low, because you don't want to ruin that average price, because you already have a great entry. Entries are always pretty important. um, but that's kind of like an example. And if you want something more safe, then you would go kind of to your dividend stocks. You would kind of go to your safe long-term dividend stocks. You could say Walmart is a pretty long-term safe dividend stock because it doesn't have too much volatility, as you can see here, and it's been just on a steady uptrend over the past couple of months. It does have a couple of things where things happen, but it's a pretty safe stock and nothing really happens to it because Walmart has been here for almost forever. And obviously, let's say Costco as well. It's a pretty great company. One of the biggest wholesalers in the U.S. for groceries or wherever it may be. Um, so you could choose it like that. Um, and Coca Cola as well. Pretty simple. I mean, these are all great companies that have been here forever and will have a lot of cash in hand. They also pay dividends, so these are great because you could reinvest those dividends and you could reinvest more and get paid more dividends. And you basically most of your income would come from the dividends because these stocks are non-volatile. Um, you know, so it's pretty simple. I mean, obviously, if you look it up, you could go on Google and be like long term dividend stocks, or dividend paying stocks, and you could go on there and kind of look at the charts and kind of decide, hey, I want this, I want to buy this one because it has a good dividend yield, and what, and blah blah and whatever. Um, you know, and obviously, like I said, it's kind of also risky buying into long growth stocks, because look at how big this run up was. Let's just mark it right here. Let's say you buy right here, um, around almost 400%. But let's say you bought around right here, you would be down almost. And let's see, you sold here, you would buy down almost 50% of your money. So you always got to cut losses quick on these, and always try to find good prices, because this was a small startup, almost $9 a share, and look at how it did. But now it's kind of just, you know what I mean. But let's say you have your Microsoft and Apple and your Google, and these are companies are just, they're always going to be here, so you could also invest in those, which are a little bit more volatile, um, but they have great returns and they're pretty safe compared to other um, tech companies, because they've been here for a long time. So yeah, it's pretty simple, guys. If you could look this up, and if you have any questions, I'm more than happy to be able to answer them in another video. But yeah, I just wanted to do this short video because some people have been asking for it. Thank you guys so much for watching, and see you guys in the next video.